Welcome everyone to the Vested Interest channel. This is Shane back for a stock pick of the day video. We're going to take a look at one out of the consumer discretionary sector, Marriott Vacations Worldwide. This is a little different than the Marriott hotel chain. This is their vacation arm. So you have to be like an owner or a member to be able to visit these sites. Now this is the vested interest stock trainer. This is the criteria we will be going through in this video. It must meet 5 of 8 to make it onto my watch list. If it was a company out of the financial sector, we would add in price to book. You can use price to book for any company. Just keep in mind, don't blindly use one as fair value. That's really for banks or companies out of the financial sector in general. If you're looking at price to book, compare this company to itself over time as well as companies in the same sector. Now back to Marriott Vacations Worldwide. You can check them out on their homepage, www.marriottVacationsWorldwide. That's www.marriottvacations.com, www.marriottVacationsWorldwide.com. Again, that's their homepage. And as you can see here, 1984, Marriott Corporation becomes the first hospitality brand to enter the timeshare industry, right? So you're basically buying a piece or a slice of the property that you can go visit certain times of the year. Typically, I think you have to, plan that out and say, I'm going to visit this weekend. Make sure no one else in your timeshare is utilizing that same slot. Ownership resorts, MORI, is established. In 2019, MVW acquires ILG Inc., encompassing more vacation ownership brands, and exchange company Interval International. So this is where, let's say you buy timeshare in one location, you can exchange that time with other people who own timeshares in other locations in the United States or worldwide, right? In other locations that they have for these. Again, this is a little different than their regular hotels, and these are more resorts that you have to buy timeshares or be a member of. Vacation ownership, offering owners a lifetime of memorable experiences at resorts and vacation properties around the world. So again, this is a vacation membership, ownership, timeshare, and I don't know how these timeshares work. Again, exactly, if you've got to select certain weekends you're going to go or times you're going to go, but I'm assuming that's how it goes, where you pick the weekends that you want to go, and then based on availability, you can either utilize it or not, and then you can again swap these out with people who have timeshares in other locations around the world and utilize. Maybe if you don't have a slot in the one you want to go to, but someone else has an opening, you go to theirs, maybe they come to yours later on. There's some of that. You can check them out again at www.marriottVacationsWorldwide.com if you want to know more about them, or if you want to buy a timeshare, I guess. Now, the reason we were taking a look at them, down at 3.93% on the day. We are talking about Marriott Vacations Worldwide Corporation, ticker VAC, out of the consumer discretionary sector. Closed out the day at $66.57. 52-week range as low as $49.22, as high as $100.32. They are not quite within 15% of a 52-week low. They need to drop under $54 per share. I think it was $54.03 per share, but either way, not quite there at that 52-week low quite yet, or 15% of that 52-week low. Market cap of $2.322 billion, a beta of 1.49, so they are more volatile than the overall market. You could utilize that volatility to your advantage, buying whenever there are downturns, holding on the upswings. But again, this one not quite there to 15% of that 52-week low, where I get interested in a company. Price to earnings PE ratio seems relatively low at $10.10 per share. Earnings per share EPS at $6.59. Earnings date coming up in November on the 5th there. You can tune into their earnings call. I'm sure they'll have it through their website if you're interested. Forward dividend is $3.16. I'm pretty sure this one is a quarterly payer. This is actually the first time I'm looking at this company as well. Dividend yield of 4.52%, so a pretty high dividend yield right now. Starting dividend yield anyway. Ex-dividend date September 17th. We are past that. Looks like they are going to pay out on October 1st. So unless you are buying them on the 16th or before, you will not get that October 1st dividend, but you would potentially get the next one, or you would get the next one if you were to buy them now, but you're going to have to wait a few months to get it if you hold them that long. And a 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, not affiliated with the site, just one of the sources I go to for information. They see it getting back to $91.90, which is not quite back to its 52-week high. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, you look at their 5-year dividend yield average, 1.52%. You compare it to the current, 4.52%, or over here, forward dividend yield, 4.52%, same number. Since it is higher than their 5-year average, that actually speaks to undervaluation, at least according to dividend yield theory. Not only undervaluation, but significant undervaluation, again, according to dividend yield theory. Payout ratio, I like under 75%. They're looking at 47.14, so that's much lower and gives them plenty of room to continue to raise that dividend. Doesn't look like they're in danger of a dividend cut. Looking at free cash flow, I want growing free cash flow over time because companies can do some things with that free cash flow. They can hold it on their books as cash or cash equivalents, pay down debt, make acquisitions, reinvest back into the company, buy back shares, raise the dividend over time, and we want the company to be able to do all of those things. So going back to December 2021, you can see $296 billion here, 2022 up to $457 billion. 2023 looks like it dropped down to $114 billion. Or million, I mean, so 296 million, 457 million, 114 million. 2024 down or back up to 148 million, and then trailing 12 months, which does include part of 2024, about a quarter worth of 2024 numbers still, is at 70 millions so far. So we'll have to wait to see what the rest of 2025 holds. Now, repurchase of capital shares, they are pulling shares out of the market. 78 million in 2021, 701 million in 2022. 2022 was a pretty good year. Now, it does look like they were down in repurchase of shares and free cash flow in 2023, so definitely a downturn there. 2024, further downturn it looks like, because even though their free cash flow went up, they really dropped their repurchase of shares down to 56 million, and that's where the trailing 12 months has them. So I'm assuming that this 56 million is still 2024 numbers, but again, we'll have to wait to see how much of the trailing 12 months is really 2024 numbers as we exit 2025. Now, jumping over to stockanalysis.com, this is another source I go to for information, and I will again point out that these price targets were last updated on August 21st. So we are at the end of September. That is over a month old now, so keep that in mind. These numbers are about a month old right now. But they do have 6 analysts that have taken a look at ticker VAC, Marriott Vacations Worldwide here. They call it a consensus buy, or did back on August 21st. Low estimate of $57, that would represent a 14.41% decrease from where it currently sits. Average estimate of $90.50, which is not too far off what we saw with Yahoo Finance on the previous page. That would represent a potential 35.89% increase. And if it happened to hit their high of $127, not only would that be a new 52-week high, that would be a 90.69% potential increase from where it currently sits. Now, I like to look at some statistics as part of the initial screener. I like to look at return on capital employed and earnings per share growth. Return on capital employed, I like above 10%. They're a little lower than I like at 6.32%, so I'd like to see that increase. And EPS growth, earnings per share growth forecasted over the next 5 years was not listed, nor was revenue growth. This is usually part of more of a deep dive, but I like to include it here anyway because it's right there by it. Why not snip it anyway? All right, quarterly payers, we mentioned payout ratio 47.51%. This is one example where stockanalysis.com and Yahoo Finance, they're a little off, not very much, both around 47%, but maybe you look for a third to see if there's any discrepancy. It doesn't look like it's very much if there is any. 40, both under 50%, 47%. Dividend growth 3.95%, so that does beat inflation most years. So not terrible, and with a 4+% dividend yield, that's pretty nice, right? You're getting a 4+% dividend yield currently with 3.95% dividend growth. Now, I'd like to see that increase a little bit since their payout ratio is under 50%. But if they can maintain that over a long period of time, like I said, with a starting dividend yield of over 4%, it could turn out to be very, very nice over time. Dividend growth the years 4 years. Buyback yield is positive, so they are pulling more shares out of the market than they are issuing. 1.41% on the positive side. Shareholder yield is positive at 6.16%, which is what we want to see. They do pay off schedule from most companies, so this is nice. If you pick up companies that pay off schedule, most companies start their payouts in March. So if you pick up companies like this off schedule, this is a way you can help level out your dividends over the year without having quarterly or monthly payers in your portfolio. You can still utilize quarterly payers if you kind of look at when a company pays out, adjust which ones you're buying, not only whenever they are showing good value, but also when do they pay out? Do you have any that pay out in January? Maybe you favor a company that pays out in January whenever its down over a company that pays out in March because you've already got a bunch that pay out in March. That's up to you. That's kind of how I do it though. January, March, June, October, January, March, June, October. So they do pay out in March, but they start in January. So off schedule for most companies. Going back in time here to March 2023, they were paying 72 cents per share in dividends. December 2023, they raised that up to 76 cents. Looks like the last raise was December 2024 up to 79 cents, and I would anticipate that they still are going to have a dividend raise this year, but it will be in December again, hopefully above that 3.95% growth for those of you who are shareholders. We'll have to see how that shakes out. All right, let's run them through the screener. Understand the business. Again, they are a company that really sells timeshares for their resorts, their vacation resorts around the world. You can switch those up with people. If you own time and you don't have a slot available where you own that share, you might be able, or timeshare, you might be able to swap it out with somebody else at another location. Or if you just want to go to another location, it sounds like, or whenever I was reading through, that you have the ability to do that. It's not just the one that you pay for the timeshare at. They're usable and exchangeable throughout their entire portfolio. Growing free cash flow, no. We had a couple down years there. Growing dividend, yes. Growing dividend, even though it's not extreme growth, 3.95% or around that 3% to 4% range with a, like I said, above 4% dividend yield. That's a pretty nice combination. Dividend payout ratio of 75% or less, yes. They were under 50%, so check there. Dividend yield theory says they're potentially undervalued and significantly so. So check there. They are not quite within 15% of a 52-week low. Again, they need to drop under that $54 per share mark, $54.03, I think it was. Return on capital employed, a little lower than I'd like it actually, only around 6 to 7%, in that 6% range really. Earnings per share growth was not listed, so no check there. So they only get 4 of 8. They do not quite make it onto my watch list. But maybe it's a company that you're interested in. And if it was a drop a little bit further to within 15% of a 52-week low, that would give it another check. And if you could go find their earnings per share growth listed out for a forecast over the next 5 years, maybe it's above 5%. But for me, right now, it only gets 4 of 8, doesn't quite make it onto my watch list. So let me know what you think of ticker VAC, Marriott's Vacation And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like ticker VAC here, Marriott's Vacations Worldwide, go ahead and drop it in the comment section down below. Let me know what you think of the videos. And don't forget to hit all of those buttons down below. Share the videos with anyone you think that might find value in the content. Thank you for watching to the end. Really do appreciate it. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. Again, there's money to never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria. Or see the advice comes from a certified financial advisor.